Hey everyone, doing a short little video segment here. Great to see you. For those of you in the group, I know we've gotten a few new members recently, so welcome. It's 2026. Just want to take a couple of minutes. Somebody gave me the idea last week about having Tuesday tips, and so you'll see in the group I've shared an article, I've shared a little blog that I found that was really helpful, shared a short little motivational tip which is going to be the focus of what I'm saying today, and then also shared a little devotional. So several little options there to encourage you and help support your financial coaching in faithfulness in finances and faithfulness beyond in the rest of life, because it applies there too, there in the group. So I made this little segment, this little post, kind of little meme today, and I wanted to talk just for a couple minutes on this. It is this: build assets, pursue ownership, not liability. Hashtag Tuesday tips. Why did I say that? Well, one of my own goals for this coming year is I want to focus more on building assets. What I mean by that is I want to be building something for the future. And so I think about this in terms of my business. I think about this in terms of my own personal life. Think about this in terms of financial goals for the years. How do I apply taking faithful little steps toward building assets? I want to pursue ownership. I don't want to build liabilities. So what do I mean by that? Well, liabilities is building up more bills. I don't want to add subscriptions. I don't want to add more services and more bills to my plate as a way of life, generally speaking, in 2026. I want to reduce. I want to be building something, whether that's building a habit or building a reserve or building an additional tweak to my retirement portfolio or something. I want to be building assets. I want to have things that are building towards something. I don't want to have liabilities. Now, this is a really good time of the year when you think about taxes are coming up and you're looking at those statements and return reports, perhaps on your retirement and stuff, looking at how things have performed. This is a really good time of year to begin to evaluate, especially with how the market has performed in the last year, in terms of if you have things in stocks, bonds, mutual funds, ETFs, that type of thing, investments. This is a really good time to look at. Do you have some stuff that's performing really, really poorly? We've had a really good year in the market. So generally speaking, this might be a time, really good time, to do some rebalancing and to talk to your investment professional, that type of thing, or to reallocate your own priority toward your savings because of that. Now, I will say this: when the stock market or the bond market or whatever type of investment, when they aren't doing as well, that is a good time to view it as being on sell. When the market overall is not doing great, it can be a really good time to view that as, hey, this is a great time to buy even more because your purchasing power goes up. When the market is increasing and going higher, though, I'd like to encourage you, don't necessarily view that as a time that you should just completely stop investing or building assets for the future. Because here's the real truth. Timing when to buy the market is like gambling. You probably are never going to do that. If you consistently invest like an automated amount, or you consistently literally take the time to do the steps, walk through the steps yourself, to invest monthly, month after month, whether the market is up or down, you are going to overall, more times than not, statistically, you're going to be purchasing in such a way it's going to continue to increase. In other words, you're not going to miss out on the long-term growth, most likely, just because it's up right now. So I'd like to encourage you, this is a really good time to, again, evaluate how things have gone, but look at this through the lens of building assets. How are you building something that's going to build for the future? So this is one thing I think about with business. How am I building? Last year, for example, I did a lot of launched into the coaching and stuff on my own after having a couple years of experience in the financial services area. Some of you know my story. I'm not going to go through all that, but I'm building an asset. I've built content. I've built different platforms. I built some habits of like connecting with people. And now I'm having opportunities coming to me. I'm having people coming to me, or people requesting to talk to me, where I did a lot of getting out there and following up with people, and I challenged myself to just do that with like 5 people a day during the week. And that was a challenging habit to get off the ground doing. But now, some days I'm connecting with 20, 30 people in a day. And some of that, a larger portion of that is not just me. And I've built an asset of a skill of how I can contact a whole swath of people relatively quickly and touch base and do follow-ups in a much more efficient manner than the past. And so rather than contacting or seeking to connect with potential clients and stuff, rather than that being a liability and a drain on my time, it's now an asset, and it's producing some fruitfulness in the sense that like I said, some other referrals and other people are seeking me out. And so that's built an asset in my business. But building content, having taught several workshops last year, done several webinars, having taught a workshop here kicking off the year, I've continued to build assets. I've continued to, if you will, flex some of the muscles of stuff I've learned and stuff I've been coaching one-on-one, and then applying those stories and those takeaways and the most effective ways to date that I've learned how to communicate those truths and those financial principles, being able to continue to use that as an asset to help more people. Now, when it comes to our finances, though, what little habits am I putting in place? Am I continuing to invest? Do you have a savings or investment goal this year? If not, make one. That is toward building assets, toward ownership, a plan of how can I pay down my debts. I know talking to some people this year, their goal is to start working on their credit cards. Just talked with somebody today. They've taken a great step. They took it on their own. I didn't tell them to do it, but I was encouraging them. That's a great step. They cut up their credit card. They're getting rid of it. Another person I think of, they got several $1,000s of credit card debt. That's the thing they want to attack this year. Getting rid of more liabilities is working toward building assets and ownership. Wherever you are in the steps, I want to encourage you. Taking the steps matter. And it's about building something that you own long term. Whether that's ownership of, I don't have debt on my plate. I've paid off my credit cards. I've paid off my consumer debt. I've paid off my house. I now own that. It's no longer a liability. Now it's an asset where if I ever needed to sell it, I'm not going to have to take a portion of the sale proceeds to pay off the remaining mortgage. I'm going to have that, and then I can, be able to use it other ways. You're building assets, holding on to your house past the capital gains amount of time and living there long enough. You're building an asset, holding on to perhaps a stock bonus that you got long enough that you avoid some taxes and it goes to a lower taxation. That's again, building upon the asset you have, looking at your retirement funds and selecting good mutual funds and doing research on what you're picking. That's about building assets. So in 2026, it's a simple thing, not a resolution, but a simple habit, a simple mindset. How are you building assets, reducing your liabilities, increasing your ownership, and decreasing what you owe to others? Or, I'll say this, what other people owe you. If you've had a habit of co-signing or lending money to other people, here's a great quick tip, hot take, to build your own assets in 2026. Reduce or completely eliminate lending to others. And completely, I'd encourage you to look at Proverbs, don't co-sign for anybody. Unless you're married to the person and then you are one in God's sight. Otherwise, don't co-sign. Don't co-sign for anybody. It's a quick and easy way, but a biblical way to protect yourself and protect your family and continue to build things you own so that then you're free to truly give on a whole nother level. When you own stuff and you're not pledged to be paying out a portion of your income or a portion of your retirement that you're taking out, when you're not pledged to be giving that away, a liability, something you're liable for, then you're free to be able to do more as the Lord would direct. God bless you, and hey, if I can help, send me a message. Would love to engage and to help you more personally in your situation or to answer a quick question you may have. Here to help. God bless.